Now, if you have a look at the results of Islamic finance, you will see that capital market requirements, the sukuk, are pretty much there. If you have a look at the asset management requirement, they are satisfied. If you have a look at takaful to a certain extent, private equity, private-public partnership infrastructures, and in general, the need of the wealthy are pretty much satisfied. But if you move down a little bit and have a look at the financing need of small medium enterprises, for example, or micro needs, like what is fashionable today in terms of microfinance, you will be surprised to see that Islamic finance has no bearing at all. In other words, in the last 20 years, life of the common people across what we call in Islam the Ummah has not benefited from Islamic finance. If you have a look, for example, at conventional microfinance, you will see a staggering results. Nowadays in the world we have maybe something between 100 to 200 million people that use conventional microfinance products. And even in Muslim countries, conventional microfinance is accepted, at least to a certain extent, as a means of financing. On the other side, if you have a look at Islamic microfinance, you will see that percentage-wise is a very small figure, perhaps something like 0.5 to 1% of total requirements. So what is wrong with this with this system? On one side, the Ummah has a feature. The Ummah is featured actually by three very strange peculiarities. On one side, you have the richest country of the world, the highest per capita income, mainly in the Gulf area. On the other side, you have the poorest people of the world. Whatever index of the UN or any other agencies, FMI, World Bank, OCI, whatever indexes you use, you will see that at the lowest quartile, there are always Muslim countries. Between the two, you have what we call equalization tools, like the compulsory sadaqah, the quasi-compulsory, the compulsory zakat, the quasi-compulsory sadaqah, that are deemed to bridge this gap, but in reality, they do not work. So it's quite clear, it's quite evident that a new approach to disbursing what I would call empowering finance is needed. Until now, the model has been for Islamic microfinance institution to mimicking their conventional cousin. Their balance sheet, both on the liability and the asset sides, are pretty much the same. The same balance sheet, the same structure. They have the same structure than the balance sheet used by conventional. And this is in spite of the fact that in Islam we have a wide array of instruments that can be used to provide financing. And those instruments are traditionally accepted. I refer to waqf, awqaf. I refer to cash waqf, or cash awqaf. And of course I refer to zakat and sadaqah. So in my opinion, we should move away from this standard approach to disbursing finance, and move to a new balance sheet that should see on the liability side equity capital, so capital that does not require a fixed return, awqaf money, awqaf fund, zakat, sadaqah, the proactive use of micro-takaful policy, for example, for to ensure the life of the people that receive financing, what we call credit life. And on the asset side, the use of loss and profit instruments like musharaka, mudaraba, or perhaps ijara. So we need a total overhaul of the structures of distributing Islamic, empowering finance in a proper Islamic way. And it seems to me that if you will be able to move towards this new direction, we will be finally able to walk the talk and give a broader access to finance to the Ummah. There is a strong pent-up demand for empowerment, for the disbursement of empowering finance across the Muslim world. I've been recently in Russia, where we have a community of about 25 million people, and I remind you that Moscow is the largest Muslim city in Europe after Istanbul, with a community of more than 2.5 million people. I was recently in Afghanistan. I went to to Kurdistan, Iraq. I was in Syria recently, and all those places have many things in common. Of course, one of the things in common is that they need financing. And the demand for religiously, or I would say even culturally acceptable means of financing is evident. People want to have access to money that is not riba tainted, and where they can see that the cost of capital is variable, is flexible, is not fixed, and where they see that the financiers share the profit and losses and of their ventures.